Welcome back. In part 1, we learned how to think through control accounts. Now let's get practical. We'll post some common transactions and explain why each goes where it does. This is our sample question. We're preparing both the debtors and creditors control accounts. Let's take it step by step. Try to think along with me and see if you can figure out where each one should go before I reveal the answer. Ready? Let's go! First transaction, total credit sales, 120,000 naira. It means goods were sold to customers on credit, not for cash. That increases what our debtors owe us. Now, which account does that affect? Exactly, the debtors control account. Pause for a moment. Which side do you think will post it? Yes, debit side, because the amount owed to us by customers has increased. Next transaction, cash received from debtors, 30,000. Now, when a customer pays, it registers how much they owe. So which account does it affect? Still, the debtors control account, but this time the amount owed to us decreases. Pause again. Where do you think that goes? Right, credit side. Third transaction, discount allowed 2,000. When we allow discount, it means we forgave part of what the debtor owes. So, it reduces the total amount receivable from customers. That means it also goes to the credit side of the debtor's control account. Next transaction, bills receivable, 5,000. A bill receivable means a debtor has accepted a bill to pay later. Once the bill is accepted, it's no longer part of what they owe us in the control account. So, it reduces the balance of debtors. That means we post 5,000 on the credit side of the debtor's control account as bills receivable. Next transaction, dishonored bill 1,000. If a bill receivable is dishonored, that means the debtor failed to pay when due. The debt returns to our books. So what happens? It increases the amount owed by the debtor again. Next transaction, credit purchases 90,000. Now we move to the creditor's control account. Credit purchases mean we bought goods from suppliers on credit. That increases what we owe to suppliers. So, which side increases a liability? Right, the credit side. Next transaction, payment to creditors 20,000. When we pay our suppliers, we reduce our debt. So this decreases the liability. That means we post 20,000 on the debit side of the creditor's control account, cash paid. Next transaction, discount received 1,000. Discount received means our supplier allowed us to pay less. It also reduces our liability. So we'll post it to the debit side of the creditor's control account. Next transaction, bills payable 3,000. Bills payable means we accepted a bill in favor of the creditor. That settles the debt. It reduces the amount we owe. So we'll post it to the debit side of the creditor's control account. The last transaction, Contra Settlement or set-off, 2,000 naira. Now this is an interesting one. This happens when one person is both our debtor and our creditor. So we owe them, and they also owe us. We can set off one against the other. So how do we post this? We post 2,000 on the credit side of the debtor's control account and 2,000 on the debit side of the creditor's control account. That means we've reduced both what we owe and what is owed to us. And that's it. We've posted each transaction correctly in the control accounts, and now you can balance both accounts to find the totals. Remember, debtor's control account tracks customers who owe us. Creditor's control account tracks suppliers we owe. Always think, does this increase or reduce the amount owed? That one question helps you know which side to post every time. If you found this helpful, don't forget to like, share, and keep practicing. You'll get faster with each question.